All 5 of the major markets ended lower last week, breaking the 6-week winning streak for the S&P 500. However, the losses were minimal, as the S&P 500 managed to reach a new all-time high Tuesday, trading to 3,127.64. The losses came in large part due to ongoing tensions around the potential Phase 1 US-China trade deal. This tension carried over to the remainder of the developed markets, causing the MSCI World Index to register the greatest loss of the major markets last week. After weeks of ever-increasing turmoil in Hong Kong, police arrested over 1,000 protesters following a 3-day standoff. Markets responded favorably to the prospect of stability re-emerging in the region, as both the MSCI China Index and the Hong Kong Index added around 0.75% last week. That said, elections over the weekend in Hong Kong led to a landslide victory for pro-democracy candidates, along with a warning from the mainland. Meanwhile, in the United States, healthcare was one of the few areas of the domestic market that saw gains last week. Financials and utilities followed, but with successively smaller gains. The remaining 8 sectors traded lower, with the greatest losses in materials and real estate. Treasuries fell again last week, as the 10-year dropped from 1.84% to 1.77%. Yet the shorter end of the yield curve remained largely unmoved. Altogether, the Bloomberg's Barclay U.S. Aggregate Bond Index gained 0.29% for the week. This week, investors will be looking to a number of economic reports, including the second revision to the third quarter GDP, which will be released Wednesday morning. Afterward, trade volume will likely subside ahead of Thursday's Thanksgiving holiday and Black Friday abbreviated session. With that, we'd like to wish you a safe and happy Thanksgiving.